Uber, the ride-hailing giant, has been on a roller coaster ride in recent years, yet the company seems to be turning a corner, showing signs of robust financial health. In its most recent earnings report, Uber posted its second consecutive quarter of positive EBITDA, a key measure of profitability. This positive trajectory has been fueled by a surge in ride-hailing demand as the world emerges from the pandemic. The share buyback is expected to boost earnings per share, making Uber's stock more attractive to investors. Despite the positive financial indicators, Uber's journey is far from over. The company faces several challenges, including rising operational costs and increasing competition in the ride-hailing market. However, with a strong market position and a commitment to innovation, Uber is well positioned to overcome these hurdles.
Uber's recent financial results have been met with a mixed reaction from the market. While the company's positive EBITDA and share repurchase program were welcomed by investors, some concerns remain. The market's cautious optimism stems from a few factors, including the uncertain global economic outlook and Uber's significant non-cash losses from investments. These losses, largely attributed to Uber's stakes in companies like Didi and Grab, have raised questions about the company's investment strategy. Some analysts believe that Uber should focus on its core ride-hailing and delivery businesses, while others argue that these investments have the potential to generate significant returns in the long term. Despite the market's cautious stance, Uber's positive EBITDA is a significant milestone. It demonstrates the company's ability to generate profits from its core operations. The market's mixed reaction highlights the challenges and opportunities that lie ahead for Uber.
One of the biggest challenges facing Uber is the rising cost of operations. Like many businesses, Uber is grappling with inflationary pressures, particularly in driver pay and fuel prices. To attract and retain drivers in a competitive labor market, Uber has had to increase driver earnings, putting pressure on its margins. Uber has responded to these challenges with a multi-pronged approach. The company is investing heavily in automation and technology to improve efficiency and reduce its reliance on human drivers. This includes ongoing development of its self-driving car technology and advancements in its ride-matching algorithms. Furthermore, Uber is diversifying its revenue streams beyond ride-hailing. The company's food delivery service, Uber Eats, has witnessed substantial growth and now accounts for a significant portion of its revenue.
The emergence of autonomous vehicle technology poses both a potential threat and an opportunity for Uber. Companies like Tesla are aggressively developing self-driving taxi services, aiming to disrupt the traditional ride-hailing model. Tesla's robo-taxi ambitions, spearheaded by its CEO Elon Musk, envision a future where fleets of autonomous vehicles provide on-demand transportation. If self-driving taxis become commercially viable and widespread, they could undercut Uber's pricing and erode its market share. However, Uber is not standing still. Uber is actively developing its own self-driving car technology and has strategic partnerships with companies like Aurora Innovation. This parallel approach allows Uber to hedge its bets and potentially lead the transition to autonomous ride-hailing. Moreover, there is a possibility of collaboration rather than outright competition.
Despite the challenges, Uber enjoys several key strengths that position it well for the future. Firstly, Uber has a dominant market share in the global ride-hailing market. Its vast network of drivers and riders gives it a significant competitive advantage, making it the go-to platform for many users. Secondly, Uber continues to experience user-base growth. The company's convenient and on-demand services are attracting new customers, particularly in emerging markets where car ownership is lower. Thirdly, Uber is strategically focused on profitability. The recent achievement of positive EBITDA demonstrates its commitment to fiscal discipline and its ability to generate profits from its core operations. Lastly, Uber's brand recognition and trust are valuable assets.
Investing in Uber requires a long-term perspective and a moderate risk tolerance. The company operates in a dynamic and evolving industry, and its future success is not guaranteed. However, Uber's market leadership, growth potential, and focus on profitability make it an intriguing investment opportunity for those willing to ride out the volatility. Investors should closely monitor Uber's progress in addressing its key challenges such as rising costs, competition, and the development of autonomous driving technology. The company's ability to navigate these challenges effectively will be crucial to its long-term success. It's also essential to consider the broader economic climate and its potential impact on Uber's business. Economic downturns could lead to reduced consumer spending on discretionary services like ride-hailing, impacting Uber's revenue growth. In conclusion, Uber presents a compelling investment opportunity with both potential rewards and inherent risks.